Hey everyone, hopefully you're having a good day. My name's Andy. This is Finding Value. Today we're going to go over our commodity update. We'll take a look at dollar, yields, precious metals, commodities, and ETFs that I follow. I'll give you my financial opinions around all of this. A lot of things getting sold off today. Lots of fear in the market. We saw a lot of those big selling pressure days yesterday. It looks like we have a follow-through day today. And I'll go over all these different sectors and what I'm seeing in the charts, in the markets. I know we're seeing a lot of bank problems, lots of banks selling off dramatically. People are starting to panic, a little bit of fear in the markets here. And I can show you where we can see that fear and how it's kind of transpiring in the markets. Again, if you guys need any help with anything in these markets, definitely check out finding-value.com. Become a platinum member. Use the word discount in the coupon code. Join us in our community. We're building a community looking at undervalued assets. Obviously, we can't sidestep all of these fear in the market and stuff like that. But I do think that the underlying structural conditions for some of these sectors are going to be incredible over these next few years. And we'll get a whole bunch of good buying opportunities along the way. So let's dive in. Let's take a look and see what's going on. We've got the dollar here. This is, again, I call it the relative strength indicator of the dollar. We're lower today, 0.64%. Very volatile today across the board. Lots of selling, lots of buying pressure in other areas, depending on where you're looking at. But we sold off here. And the thing that I'll say here is we still have good momentum to the upside. And why do I say that? I look for these large green candlesticks like this. And then I look at the red candlesticks. There's not much selling pressure. And even though we had a couple of selling pressure days here, we still have this large green candlestick in 1, 2, 3 days to go down, where it took 1 day to go up. So when I look at this, the force or momentum is still to the upside, although we had a lot of selling pressure today. The 10-year yield getting hit pretty hard to the downside. We saw that yesterday with this bearish engulfing here. That's a candlestick that engulfs a few of them before it. That momentum carried through into today. And we might be doing a back test down here just at warp speed. So we came on up, boom, boom, boom. And maybe we come all the way back down here to 3.5% or something like that, where we find some support. But lots of fear in the market, and people are running into bonds. They're diving into bonds at this time, and that's why yields are dropping. And we look at the 30-year yield. The 30-year yield down 4.3%. These are huge down yield days. These are massive down yield days. This is also looking like we're doing some sort of retest move on this breakout. We still have a little bit further to go potentially. Now, does that mean that the entire market just blows out and we continue to sell off? I mean, it's possible, yes. We've got a lot of momentum behind this move going to the downside. Conversely, here, let me back out real quick on the 10-year yield just to show you guys kind of a longer-term perspective and kind of show you what's going on with yields. We had a massive move to the upside here. I'll go on log 2, where we were hitting our head, and we punched through this. Now, when we punch through, sometimes we get some blowback. We do a retest, back test. Sometimes it sticks in this area for a good while. Sometimes it even comes and dips below a little bit. And it just takes some time. What happens is a lot of people get really nervous. They get afraid. Everything from a long-term perspective on interest rates is telling us that this is going to go up in a medium to long term. What does that mean? It means 6 months to 5 years is what my medium to long term is. In the short term, we're getting some volatility and it's lighting this up, right? It's lighting it up. It's coming on back, and we could pull back even further. And we've got a lot of momentum behind this move here. There is fear creeping into this market. And that's what this fear looks like. It's yields diving down rapidly. Bond prices are shooting higher. You can see that really moving on up. We've got this island reversal pattern where we came down, reversed, and we're starting to head on up. And that's what we're seeing in the short term. Now, is this a long-term play? I wouldn't bet on it. I wouldn't bet in the long term that this is just going to rocket higher. What I think is going to happen is that we will move up, and the long term is going to look something on the lines that we come on up and we're going to return back and go back lower at some point. I don't know what this path will necessarily look like in the short term. Maybe we come on up like this, and then we come back down and roll over. That is my best guess, because we've had a monster run to the downside where people were selling bonds and the prices of bonds were going down and yields are going higher. They're inversely correlated. So we could come on up. We could have a move to the upside here in the short term, and then I think we're going to compress it back down. But in the short term, we could see volatility. We could see lowering interest rates and an increasing bond price for a period of time. The TYX TNX ratio, what this is telling us is, I'm going to do a long term here. I was looking at a bunch of different charts, and generally speaking, when this goes up, gold, especially physical gold, does very well and mimics or correlates very well with this. We are at a very low price down here. And if this starts to turn back up and we head back up, and I don't know if it is, I'm just saying if it does, gold will do crazy things. What that means, and I don't expect this to happen immediately, but when or if it does, what we'll see, generally speaking, is we're going to see the 10-year yield and the 30-year yield normalize. So it'll go from inverted to more normal, and it usually will drop when that happens. Today we dropped and the curve normalized some. That's why we were coming up in this ratio. Gold and silver, when the curve normalizes and the dollar falls, that's jet fuel. That's just rocket fuel right in the engine for the afterburners. So today we had that type of setup, and we got afterburners going on. So I suspect precious metals to do very well. The CRB index was just flat today. We did have oil up a little bit today, and some of the commodities were holding strong. We can also see that commodities in relationship to stocks did very well and are starting to head higher. We've broken the downtrend in this ratio where we could head higher in commodities in relationship to the S&P 500. A big picture view here, we broke out. Let me get off log here. We broke out of this downtrend. We came on up, and now we're getting our first kind of pullback. We're still in wave 2. We're not done with it yet. And at the end of wave 2, you can obviously have a washout selling period. That's where prices decline rapidly in a short period of time because of fear in the market. Are we starting that washout fear in the market? We very well could be. I'm not sitting here saying that I know every single move that's going to happen, but that could be something that we're seeing, and a little bit of fear in the markets for whatever reason it is. It could be bank related and stuff like that. But we could be seeing that right now. Gold, rocket fuel, heading to the upside. This is the Green Army stepping in. Now, the question is, are those conditions in yields and the normalization of the curve sustainable for a period of time? And I think in the short term, yes. In the long term, I'm not 100% sure. I think that we'll get a period of softening, which gold will like, and yields could pull back and all that. But I don't think that we're going to go back down below this long-term support level here, unless it's a failed breakout. If it's a failed breakout, we come all the way back down, and gold's going to be in euphoria. Gold's going to kill it. If we come and we just kind of come back to this point over here, and then we start to head back higher and invert the curve again, then I don't think that gold's going to run forever. I think we'll get a nice, good move up, and then we'll consolidate for a little bit beyond after that. That's my guess. Silver also heading on higher today, up 2.3%. Again, I'm looking at these big selling pressure days through here, and again, this up day in silver is not overpowering those selling pressure days. So I'm still remaining neutral at this time. And platinum, also, I don't see convincingly large green candlesticks yet. I haven't sold anything. I'm still riding it, but I'm just kind of riding it and watching what's going on. Could this very well come back down? Yes, it could. Platinum's kind of trades on its own accord. It's not really correlated as much. We could have a 1, 2, 3, 4, 5, 6, and then maybe we're putting in one last little hump before a major move higher in platinum. But that we might have a little bit more downside left to go in it before that happens. Again, I don't know what the future is. I'm just trying to figure out how the herd is lining this thing up. And in the short term, anything can be ultra volatile. Long term, though, this thing looks absolutely excellent for a move higher long term. So long term, definitely bullish. Short term, I'm trying to figure out what the heck the market's trying to do here. It is all over the place. We've got the XAU to gold ratio down lower today, where gold actually outperformed the gold and silver mining companies. From what I've seen just here recently, gold and silver mining companies do really well when they reflate the economy. When people get scared, it seems like the physical metals do very well towards the end or towards a slowdown of a cycle. Now, I don't think we're coming to the end of a cycle. I think that we are in a slowdown of an expansionary phase of real estate in that cycle. And think of it as like the years 2000, 2001. I think if they were to re-stimulate the economy or try to do anything, it would restart the expansionary phase of real estate because we don't have an oversupply phase, in my opinion. But that's my opinion there. GDX slightly higher day, but this isn't convincing that this thing's just going to rocket higher. Gold definitely looks the best of the group, physical gold, and the mining companies look a little bit weaker. That's why they gapped up and they got sold off throughout the day. SILJ, the same thing happened there. Gapped up, sold off throughout the day, and it doesn't look as strong as what I would normally see. If I would want to see large, big candlesticks that are green just ripping it. What we see in something's weak is you get a wick at the top, you get a little inverted hammer or something like that where it traded up and then it sold back off and came back down. That's what we've got right here. So I wouldn't say that's a strong candlestick, and I'm not convinced that this is going to just run. But I will say gold looks very good, physical gold itself. Looking at crude oil is still holding in there despite the carnage out in the markets. I do think that, depending on how much fear is in the market, this could go either way. It really could. We've got down the back half of 2023 and past that, I am convinced that oil is going to do incredibly well. But in this first quarter, second quarter, I'm not 100% convinced I know which direction this thing's going to go. We've got, we'll say, fear in the markets from, we'll say, the overall markets and the United States. We're increasing interest rates. We're seeing a little bit of a slowdown in housing starts. The M2 money supply is slowing down. There are a lot of things in this market where people would perceive it as very weak, and I would agree with that assessment of the market. But we also have incredible physical tightness in this market as well, and the tightness is going to get worse as time goes on. So when will these two paths cross and inventory start to get drawn down? That is anyone's guess, and that is what we're playing with. Some people will say we're playing with fire. Some people say that this is going to crash, and we're going to see a spot where, let me back out here, where we could come back and basically retest, this spot down here in the 50s or 40s or wherever they want to draw that upper trend line, depending on how you want to draw it. You can draw it like this. That would be much down like in the 40s or 50s. You could draw it kind of up here, wherever you want to put it. Or, you've got people who say, the physical tightness in the markets are going to drive this thing higher, and we're going to see $100+ barrel of oil easily for the next few years and higher. Which one is going to be right? I think the 100+ is going to be right in a year or two. But over the next few months in shoulder season, it's anyone's guess, guys. It's anyone's guess. And we can go either direction very quick, depending on what the markets and the emotions of that market want to do. Natural gas down 4.29%. We're right in that. This is the support zone through this zone here. You can see all these traded through here. So we've got a little bit of support, and it may even come all the way back down to lower $2. But we are basing out, I think. That's the good thing. We're coming up, and I always talk about it's going to do a couple of humps. So we're doing these humps, I think. We're going to hump it out, so to speak. And I do think eventually this is going to go back up. I think the markets have problems with energy in general. So what they're going to do is they're going to raise interest rates, try to kill as much demand as possible to bring in line the demand with the, we'll say, weak supply response in the markets. XOP, yeah, you know me, right on support. Could we see further downside? We very well could. We've got lots of selling pressure over here. And with the fear in the market, this could drive it lower. Now, it doesn't mean that this breakout, if we do break that trend line, is going to stick because it does depend on the price of crude oil, and it does depend on the overall markets and what's happening with the overall markets. We could break down and we could come all the way back to 108, where we've got other support going across in the horizontal. That is a possibility before we get another move higher, and that's a good chunk lower. What I would view that is a good buying opportunity if it were to get down there. OIH, another one that is selling off, getting a little bit more selling pressure. This could persist to the downside. We saw some pretty strong fear in the markets, people running to bonds, yields selling off. We've got a little bit more room downside yields-wise. Maybe there's a little bit more fear in the market. Sprott Physical Uranium Trust also selling off. Again, I don't see the buyers stepping in here. It's all selling pressure. So I remain a bear in the short term until I see buying pressure. URNM is also selling off, and it's sold off. I mean, just look at the circle here, guys. Look at all the red. There's no green candlesticks. There's no reversal of buying pressure. I just don't see it at this time. Now, we could see a further pullback if we get below $29.71, $30, somewhere in that range, and close below it, and especially if we blow right through it. But we're not through it yet, and let's wait and see. Now, does that mean I should sell all my shares and go run and run away from the uranium market? You know, I don't think so. The fundamentals are still there. The structural conditions are still there. The undersupply in energy in general is all still intact. What we've got people scared and fear in the market. Generally, what happens is that fear creates a buying opportunity for those that remain calm. So if you can remain calm and you can identify when there's fear in the market, that's generally where you can get the best buying opportunities. Now, can you predict that the fear was going to be in the market at this time? No. I mean, this looked pretty good for a breakout, and it reversed off that fear in the market. And that's what makes the market so hard, is because emotions and fear and things in the market that could potentially break, or however you want to call it, in the banking system, and people start worrying, that can happen very quick. And it can happen for a short period of time, and then they're going to regather their senses and say, you know what, it's not as bad as we thought, and then things improve again. Looking at TAN, this is TAN. It's coming into that corner. Again, there basically nothing was spared today, mainly selling pressure across the board, but that's still looking good from a long-term perspective. COPX, again, selling pressure. Still, I think this could have some more downside. I don't see any reversal candlesticks. We are coming in a little bit to support, and that is slowing it down a little bit through this support area. We've got lithium getting sold off. This could roll back down a little bit further if it gains some momentum and steam. We've got rare earth metals also selling off a little bit. Not really much of a wick at the bottom, so we could see a little bit further downside in the short term. I actually kind of like some of these getting down here because I've got a little bit of money in some of my accounts that I could maybe shift over when this starts to firm up. We talked about the S&P 500 yesterday. It didn't look good because of the selling pressure yesterday, and that selling pressure did persist today. Now we got to see what happens next week. Are we going to continue to sell off? Is that fear going to remain? Are we going to get maybe a little candlestick with a wick at the bottom, a little hammer candlestick or something like that? We got to find out what's going on. But we are still at that support level, right on that trend line. NASDAQ, same thing. Selling pressure breaking through that support zone here to the downside. And we've got some good momentum. So we'll see if that momentum continues. I still think it's going to head lower to sideways, depending on the buying pressure in the market. If we get some buying pressure, I think sideways at best. If we continue to sell off, I think we're coming back here. EEM, not getting spared. Didn't do too bad compared to some of these other areas. And we are coming towards a support zone in this general vicinity. We've got XHB also selling off. We got a little wick right on the support line coming across. We'll see if that support line holds and if that momentum carries into next week. MU also getting sold off, kind of a larger selling pressure day. We are dipping below some support here, and we'll see what happens next week. I would not be betting that this is going to turn around. I would be betting sideways to lower is what I would be betting on. Looking at copper, copper just moving sideways. So one thing to look at here, the ingredient for a big kind of selling pressure move. So generally what we see in the markets is we see copper beeline it lower. So if you look at 2008, copper started to beeline lower. That was in July of 08, August 08, September 08, and then October. It beelines lower. That is before a major crash. Copper eats it, as does the 10-year yield. Yields just drop like a rock. So copper drops like a rock and yields drop like a rock. That is when you know a crash is coming. Copper's kind of holding in there. It's got its moments here where it's sold off a little bit and then buyers come back in. I think it's confused on what to do. Just like, it's very difficult to read the markets right now because we've got the United States squeezing the crap out of it in terms of interest rates. Liquidity is coming and pulling back. But we've got China basically reliquefying their economy, coming out of a lockdown. So copper's like, what the heck do I do? And all the people trading it. I think that the market conditions are very tough to read right now because of that. You've got two strong opposing forces. Lumber is, still hanging in here. And during these crashes, generally what happens is lumber crashes. So you see like a pullback in lumber. And as lumber declines, generally what happens is you get a huge amount of supply like we had in here in 04, 05, and then lumber prices pull back and we had that crash in 08. Right now we've had a pullback in lumber, but this is not from an oversupply of homes. This is from a supply of lumber basically coming on board. And the way that I view this is that this is basically a Livermore cylinder that is being formed. So I think there's weakness in the markets. So we've got 1, 2, 3, 4, 5, and then you get this double top, it pulls back, and then you get one hump there. And then I think we're ready to maybe potentially head higher. And it's just sitting here in a holding pattern, which I think is bullish. So I'm trying to piece this all together in front of everybody too, which is brave. I'll just say that. Because people say, oh, you're wrong, blah, blah, blah. I think this is a Livermore accumulation cylinder. I think that there's housing that's going to come in the future when interest rates go back down. And I think interest rates are the thing that's going to be the pivoting factor in the housing market right now. That's what's gone up the most to make it the least affordable. And I think if it goes back down, that will also have the largest impact. Iron ore is still hanging in there. In fact, it's continuing to go higher. And again, I'm seeing these patterns across the board here of kind of this Livermore accumulation cylinder. I know it's 1, 2, 3, 4, 5, 6, 7, and then I think I don't know if we come back down or if it's just going to rip it, but it's looking good. Nickel's holding in there. You can see from a big picture view it broke out, and we're doing maybe this double top, and then we pull back to some degree. We've got aluminum here. Aluminum having a little bit more of a selling pressure day today, but it's not out of control selling pressure. I don't see reversal candlesticks here all that much. I mean, we might have a little more downside, but it's not just massively getting sold off. Baltic Dry Index is broken to the upside, guys. Baltic Dry Index looks fantastic. So that is also kind of flying in the face of what I would say a huge recession. Generally on these, what you get is, I think that we are somewhere like here. And even if you were to take this pattern here, I'm going to show you guys some cool stuff. We'll do a bars pattern. I'm just going to take it from here to here. And then if I were to take this and just overlay it, tell me this doesn't look exactly the same. So this is your lead-in pattern here, the move higher. And this here is that pattern coming back. So I think that this spot here is, and I'm just going to draw this kind of rough there. I think that this is that. And then a big move is about to come at some point in the future here. And I think Powell knows it. That's why he's trying to slow this all down. He's seeing the same thing that we're seeing right here, where this could rocket on up. And we're seeing these accumulation cylinders happen across a bunch of different commodities. But it doesn't mean we can't go lower in the short term. Newcastle coal also slightly lower in the short term, or slightly higher in the short term, sorry. Slightly higher, but we'll come to some bottom at some point here, turn around, because we have an energy crisis. Why do we have an energy crisis? Because I haven't solved anything on the energy supply side. So yes, we had warm weather in Europe, and I don't think we're going to have warm weather every single winter for the rest of our lives. So we need to bring on more supply. We need to figure out ways to fill up their inventories that do not involve Russia supplying it through a pipeline. And then with the fear in the markets, we're also getting Ethereum selling off, but we are getting some buying pressure here, and that's what the wick on the bottom is. Hammer candlestick. Bitcoin had a little bit of selling pressure, hammer candlestick. So we'll see if we get a reversal here or sideways in Bitcoin and Ethereum, and if some buyers step in here in the overall markets. But right now, things are looking a little bit dicey, a little bit of fear in the market, lots of selling pressure in the short term. And we could see a little bit further downside because I don't see that turning in yields, bond prices. We can definitely tell that the market conditions are ripe for gold. So I think gold could potentially go higher here in the short term. And we'll see how long this lasts. Maybe it lasts for a month or two. That is a possibility, a couple months or more. We are in shoulder season. It's kind of the weak parts for natural gas and even for oil. So I don't expect it to rocket launch higher, but we could get a pullback too, because we are in the weak spot of the market in terms of seasonality wise. And then we're also, if we've got fear in the market, it could drag stuff lower. Am I going to sell anything? No, just going to ride through it. Remain calm, raise cash. Raise cash meaning I'll just stockpile cash on the side and then just wait for this fear to subside and then get a bunch of good buying opportunities. If that sounds interesting to you, definitely sign up for finding-value.com. We have a Sunday 5 p.m. Mountain Standard question and answer session, Mountain Standard Time. I'd love to have you there. Join our community, have fun. We do have a Discord channel that you can hang out with or in and contribute to the community. You can talk to other people. You can talk about companies or whatever you'd like. And that's all I've got for today, guys. So hopefully you're doing all right, riding through it, and we'll catch you next time. This is Finding Value.